Viktor, I want to ask you, recently we've seen a lot more enthusiasm about DeFi, a lot of inflows into DeFi. Do you think this is going to continue? And where do you see the state of DeFi today compared to what it was, for example, 1 or 2 years ago?
I think it's really the second biggest use case of crypto right now, but still a relatively small market. The market size of all DeFi is roughly $400 billion. We think, if the entire crypto industry is going to grow to 10 trillion, which is 2x, DeFi is going to grow 10x from 400 billion to 4 trillion.
So what are the major trends we're witnessing in DeFi today?
Yeah, I think there are two major trends. One is more focus on decentralized exchanges. So exchanges like Hyperliquid, for example, now have 68% market share. As we onboard more and more people directly onto blockchain, we see that they are actually staying and trading on-chain. So decentralized exchanges is number one. And number two is on-chain yield. Super interesting. Yeah. In real life, what do you get as interest rate from your bank? Maybe 2%, 3%, maybe 5% on US treasuries. In DeFi, we are today very, comfortably generating 20%.
Yeah.
And what do you think the impact will be on yield? I mean, as we see, let's say, the DeFi ecosystem continue to grow, do you expect those yields to go down? And what do you think is driving this increased activity? Is it, for example, the lack of KYC? Is it the fact that it's separate from the CeFi world? Like, what do you think will be the impact?
Well, actually, all new platforms are KYCing their users. So, for example, stable coins like Ethena are KYCing their users. Then, platforms like Pareto.credit, where you can actually generate yield by lending to market makers, are also KYCing. So it's not a shadowy financial system. Mm-hmm. What is actually bringing people is just more, ease of use, because you can just connect a crypto wallet very easily with a couple of clicks to Hyperliquid, and then you can trade, for example, or to Uniswap. And second is very interesting yields, because where else can you generate 20%?
So let's move to talk about crypto private credit. To what extent do you think that institutional investors today have the appetite for private credit in crypto? And do you think that this is something we're going to start to see grow more in the upcoming years? To what extent are institutional investors contributing and entering this landscape?
Yeah, that's a very good question. I think this is actually the trend we are betting on. So in 2022, if you remember in the previous bull market, we had a private credit in blockchains of roughly $35 billion. So institutions were actually lending, like Genesis, if you remember, were lending, to blockchain companies $35 billion. Now it's only 10 billion. I run a 100 million fund, so we have 1% of this market. But going forward, look, the private credit and traditional finance is $7 trillion. So there is a huge potential to grow because, again, it's much more easy to use, number one. And number two, where else do you get 20% plus yields today?
But what about the topic of counterparty risk then? Of course, if we, on a private credit side, when these institutions are lending to each other, do you believe from a counterparty risk perspective, the risk is lower now because of more transparency or other reasons, or that's still a lingering risk that exists and thus why the yields are so attractive?
Yeah, of course, there is risk. There is no free lunch. Yeah. And but the risk can be better managed because those protocols are on-chain. So why did we have in 2022 actually the issues we had, if we remember, with Three Arrows Capital, is because the balance sheet they were presenting to their lenders, like Genesis, was not correct. And when you are on blockchain, you actually see who you are lending to. So there is more transparency.
So when you look at the year 2025 and going forward, where do you see the biggest opportunities to create yield in the crypto industry?
Yeah, that's an excellent question. My bet is on real-world assets coming on-chain, and we can actually, multiply yields. So let me give you an example. We are now investing into Henri.finance, like on-chain reinsurance. It's basically a reinsurance protocol which allows you to generate roughly 24% yields. So underlying reinsurance is 14%, and then you are using Ethena staked stablecoin as a collateral, which generates 10%. So 14 plus 10, it's 24% yield on US dollar. Where else do you get this in the world today?
Yeah. So it's interesting because any asset that is basically now only available to institutional investors, now this gives a chance to actually for retail and the mass market to take part of it.
And as you know, reinsurance business in TradFi, it's a massive market. $700 billion growing at 11% per annum. Mm-hmm. But us real people, we cannot really subscribe easily.
Yeah.
And that's why we are putting it on a blockchain because, just standalone, it generates 14% per annum. So very interesting yields.
So let's touch on this point, right? I'm going to talk about real world assets coming basically on chain and generating yield for crypto investors, or any investor actually. What do you think is needed to see, like to catalyze the whole RWA ecosystem and to have more of these assets to can come on chain and generate yield on it?
I think we need just two things. Number one is more funds like ours. We are not competitive. We embrace all our friends doing the same thing. So more funds like ours. Because, when you go to your bank, Emirates NBD, I assume, let's say Emirates NBD is your bank, should be super easy through a user interface of your bank just to subscribe to this kind of private credit fund lending to blockchain. So that's number one. And number two is just, ease of use. And this is connected to education. So I welcome, shows like yours and also, more YouTube videos of just people saying, look, like this is a normal industry. It's actually very transparent and that's why lower risk.
Yeah, so we're talking about ease of access and ease of use as well.
Yeah, and education. This is what Crypto Weekly Zero. That's all. You can never go on. Thank you very much, Viktor. That was great to hear from you. That was Viktor Fischer, the CEO and founder of RockawayX, with us here.
Are your children prepared for the future of money? Order Decoding Crypto with Henri and Hodler, the #1 new release kids book on Amazon.